Welcome to a budget special for 2022. I thought it was important, based on all the questions that we're getting from you, that we talk about the budget speech that was recently held by our Minister of Finance, and just to cover what I think are the main points that are relevant to us as investors. You know, we don't really need to focus on all the stuff that the economists get excited about. I mean, what's important to us is how much more money we're going to have in our back pockets at the end of the day, and any future trends which might make our lives better. So I think for me, one of the pieces that's most important to note from the budget speech actually didn't happen in the budget speech itself. It happened afterwards, and that was an amendment to Regulation 28. So I just want to explain a little bit about what Regulation 28 is. Regulation 28 is the thing that explains what we can invest in our retirement fund. So it determines how much we can put in cash, how much we can put in property, how much we can put in bonds, and how much we can put in shares. In addition to that, it also dictates how much of our retirement funds we can invest overseas. And until recently, that's been a maximum of 30% of our retirement fund. So if you had an RA, you could put 30% of your RA overseas. What's happening now is that the minister announced that Regulation 28 is going to be amended in the month of March, and that will be to increase our offshore allocation from 30% to 35%. And that might not sound like a big number. If you say, well, I'm only going 30 to 35, the reality is that it's a massive relaxation in exchange controls, because the biggest amount of savings in South Africa are actually held in retirement funds. So when you're increasing retirement funds offshore allocation by 5%, it's a huge number. And so I think for a lot of us, we need to understand that that's a real change. And the other big change around this is the signal, because I think a lot of us would have said, oh no, there's a lot of temptation by the government to bring more money back into South Africa. In other words, maybe reverse exchange controls a little bit. And in fact, what they've done here is the opposite. They're relaxing exchange controls in the size of assets where it really matters, in retirement funds. So I'm very excited about that. I think it's a huge change. The other part of that is that they're increasing our allocation to the rest of Africa, so that retirement funds can also invest 10% of their money in Africa as well. So what it means for all intents and purposes is that retirement funds can have an allocation outside of South Africa of 45%. 35% in the rest of the world, 10% in Africa, the balance in South Africa. I really like it. It's a great signal for investors, and shows that the current regime are really got their eyes focused on the right things. I think the other remarkable thing is worth remarking about the budget is no increases in the fuel levy, no increases in the road accident fund levy. And that's important, because what it's telling you is that governments realize they can't keep taxing us on an increasing basis forever. There were obviously I shouldn't say obviously, but there were no other increases in income tax, VAT, or anything like that. And in fact, another great signal was a decrease in company tax rates from 28% to 27%. Again, it might not sound like a big number, but just think about the signal that it's sending to business. It's saying to business, we value business, we know business needs to make more money, to make more profit, so that they can create bigger dividends, and those are all great signals. It's gone from maybe 5 or 10 years ago, where business was seen as the enemy, and it was all about the state, and make the state bigger, make state-owned enterprises bigger, to now saying, we know as a government that the employment will be created by business. We know that business are the ones that will drive the economy, and it's government's job to facilitate business to do that. And I think that it's a fantastic signal. And the minister was at pains to speak about the fact that tax rates in South Africa are very high, and he almost hinted that he thinks they're too high. So we can look in the future to see a decrease in company tax rates even more, and I also think we'll see a decrease in personal tax rates in the future. What it requires, though, is that the economy needs to start growing. So we were really lucky in the last couple of years that we had a lot more money as a country from mining, because the mining sector has been doing very well, because commodity prices are very high. And that's been great, because it means, for example, in the last tax year, we got an extra 180 billion rands worth of income earned through taxes from the mining houses. And what was another great signal for me was that the government took 45% of that extra money and used it to settle debt early. And that's great personal finance behavior. For example, if you get a nice big bonus that you weren't anticipating and you had too much debt, you would then use that money to settle debt rather than to spend more on an ongoing basis. That's exactly what government has done. So I'm really happy about that as well. they were under in huge pressure to increase the social spending. In other words, to allocate more money to social grants, to raise those grants beyond inflation, and they didn't do that. And I think it's showing that this government has got a lot of focus on fiscal discipline, and although our government debt levels are very high, what we're seeing is that the projection, the trajectory of that debt is going in the right direction. In other words, we're going to pay off our debt a bit earlier than we should have. We're not going to pay off as much debt as was going to happen in the past. And those are all really good signs. So I must say I'm very happy about the budget. I think it was a difficult budget because the economy is really struggling. COVID was a huge blow to the economy, and so to use any kind of bonuses to kind of pay off debt, I think was really good. And if we can see future decreases in our tax rates, it will have a huge economic impact. So really happy with this budget. I'm very impressed with the way the government's working at the moment around the fiscus. SARS is definitely delivering more tax from more people, and that can only spell good news for all of us in the future. So I give this budget 2 thumbs up. Really happy. I hope that we see more good, positive news in the future. Let's look forward to the years ahead. Thank you for listening to Honest Money. If you have any questions, you're welcome to reach out to me on Twitter. My handle is @Warren Ingram. Don't forget to subscribe. We're on Spotify and Apple Podcast. Chat soon.